All right, amigos, welcome to the weekly show. Happy to have everybody here and everybody that is tuning in the future. Looks like Knopf just joined me, so I'm going to go ahead and open up in a word of prayer here. Father God, we praise you and we bless you for this amazing day, this amazing time. We thank you for spring. And I might just speak a special word of encouragement over anybody listening to this, God. I just pray that they would see breakthrough in whatever area they're struggling with, that you would give them divine wisdom, counsel, and discernment, that you would just show them where to invest, specifically with finances, but also I pray that you would show them where to invest their time each and every day, and that there would just be continued shifting in their lives, that we would find an army of people to join together and press into this dark and scary world together and just be a light for the lost to see, and continue to give us creative mindsets of how to build business and how to invest to further build your kingdom, God. And so we pray you continue to bring people, and I pray you bring people onto this space, onto this show that can actually listeners, but also people to share insight that we can all learn from as well. So we just praise you again in your name, Jesus. Amen. Amen. Naftali, great to have you with us this morning. I just sent the co-host invite, so hopefully you will be getting that here shortly. But it's been a crazy week for anybody who pays attention to the markets. Long story short, the Trump administration came out with tariffs, and they are significantly worse, I would say, than pretty much everybody anticipated. So we're looking at very heavy tariffs across the board, and a lot of people panic sold a lot of stocks. And so the macro environment, which for those who don't necessarily know what that means, it's basically the broader picture of what's happening politically in the world. It's super interesting right now. It's very difficult to kind of predict and see what's going to happen. So it's actually, I would say, a very difficult time to be an investor. But with that said, I don't necessarily think it's a bad time to be an investor, because stocks took a major bath this week. Like, I saw Apple down pretty significantly. Just a bunch of like really traditionally strong names taking a bath. And so I think even like Nvidia, which had a run, it had a crazy run over the last few years, but I think it peaked around $140, and it was the number 2 biggest market cap stock out there. And then I think it took a bath, and it's probably somewhere around $90. So you're talking around a 50% wipeout on the second biggest stock, which I think you need to pay attention to, because you're talking trillions of dollars in market cap. And so with a wipeout that big, it might be close to $2 trillion that got sold off on that particular stock. So that's a lot, and there's a lot happening there. It's hard to read what is actually going to happen. There's a couple different theories on why these tariffs are out. And for those of you who are kind of just unsure of everything and why are we tariffing people, tariffs are actually, if you scroll back in the history of this country, they were actually being used during what many people would call the golden age of America, where incomes were significantly great. Just basically happiness, health, everything was at like an all-time high, prosperity, wealth. And I can't, you can look at the chart. I can't remember when this time frame was. I know it was pre-1970. You might be talking like 1930-ish, 40-ish, somewhere in that ballpark. But long story short, eventually the table shifted and we started just taxing personal incomes and basically capital gains and stuff. But once upon a time, it just the revenue of this country was basically built on collecting tariffs from other countries. So it was basically a tax on consumption, which you could argue if that's good or bad. But I think it could be a very good stance that this country's taken. And I think, a lot of people believe the reason why we're seeing tariffs is because over the years, specifically the last 25 years, through the agreement of NAFTA, we've pretty much shipped off a majority of our good manufacturing jobs. And so a lot of people make comments that nothing's made in America anymore. And to a large degree, that's true. And so this big trade-off that we made with China, allowing them in the World Trade Organization, we've basically said, okay, we're going to trade our good-paying manufacturing union jobs. We're going to trade those for cheap imports, cheap goods. So instead of your neighbors making a really great wage and having a good life, they're now going to be laid off and having to work at retail or some big corporation, not really making anything, just doing more service. And the result is the rest of us will get, we'll be able to go to Walmart and buy a cheap table for $70 as opposed to maybe, a little more money, but it's actually high quality. And so that's kind of the way the whole world shifted. And for me, it's actually tough to know what life was before then because I'm only 27. So I've basically been around for since this happened. So all I know is cheap Chinese goods. But whenever you start looking at antique furniture and stuff and just how well this stuff was built, it's pretty fascinating to see the major decline in quality over the year of pretty much everything. And so this pivot could really get interesting because it's kind of a sticking your neck out for, I guess you could say, the middle class, because whenever you stop basically producing stuff in a country, realistically the country should not be doing well. However, we've designed this crazy finance system where America, which used to basically be the powerhouse of production in the world, has turned into now the consumer of the world. And so instead of producing stuff, we just consume stuff, and what we basically export to the world or what we sell to the world is debt, which is hard to wrap your head around. But basically, these other countries have agreed to produce stuff pretty cheap and then sell them to us, and in return, there's not enough of what we actually produce or what we can give to them. And so to kind of balance that deficit, is what you call it, trade deficit, we've just decided, hey, we'll go ahead and give you these bonds. In other words, we'll sell you debt and we'll pay interest on the debt and we'll keep rolling it over. And so that's kind of the country that America's turned into. So, when our, I would say parents, grandparents, great-grandparents, the country they lived in is significantly different than it is now. The job market was significantly different back then, and so a lot more manufacturing jobs, which paid really good wages, consider if you factor in the inflation rate and all that stuff. And that's kind of why back in the day, a single income could fairly comfortably raise a whole family. And we're not talking like specialized jobs or educated jobs, like people basically out of high school could go work at a steel mill, and they could raise a family, fairly, they could raise a family without much stress, I should say. They could afford to own their own home. Each kid has a room. It might not be a big room, but they have a room, multiple kids, no government assistance. And so today, if you have a guy who graduates high school, I'm talking non-specialized trade, what are your options to really work at? I mean, a lot of it's just warehousing. And so if you get a job at a warehouse, you're probably making in the ballpark of $15 an hour. Your health insurance isn't great. You're looking at, for a family, probably a $4,000 deductible, which is, if you have a medical emergency, it's pretty much going to cost you $4,000, and you're still paying monthly for your health insurance. Your employer pays most of it, but you're still paying. If you want to have a kid, you're paying, once again, over $4,000. And so, you start doing the math. And so for our local area, I mean, I'd say $15 starting out at a warehouse is what you can expect to make out of high school. And I know a lot of people that do this who feel trapped. And the problem is, like, a lot of people will say, oh, well, you just need to cut back your lifestyle. But the problem being is that, okay, so you get out of high school, you pretty much have to own a car. So you're going to have to borrow money. And so even if you buy a cheap car, which, I mean, you're not going to find a decent car for probably less than $6,000 today. And so now you have a car payment, your interest rate's going to be high because you don't have a credit score, and then you have to get rent. And so you're looking at I would say at least $1,000 a month for rent, more probably if you actually have a family. And so here's this guy out of high school because, once again, back in the day, a lot of people got married at a younger age. And so that's, they started families young. And so this is how it would be. The mom or the wife would not work and the father would go to work, typically uneducated, past high school. But they could comfortably raise a family. Today, if you try and do that, I think it's impossible. I'm not gonna lie. I don't see how somebody making $15 an hour in this market could afford to live any quality life on that pay, and especially I'm talking, like I said, you're working at a warehouse. You're not working fast food or anything like that. You're working at what I would consider a traditional out of high school, quote hardworking job. I don't see how you could raise a family on that and without help from the government or from family. And so that's why pretty much every young couple is a dual income household. And, the reality is a bunch of dual income households are now struggling to kind of like afford a house or make ends meet. And so whenever that happens, there's a serious problem with our job market because we went from being able one person to provide for a full family to now two people working full time at quote good jobs, unable to, I would say comfortably live. I mean, if you can't afford to start a house, I'd say you're not living comfortably. That's just the reality. So, and I'm sure a lot of people would get offended at that, but I think it's just the truth. And so whenever you really look at it, like, people used to have opportunities like out of high school, man. You go work at the steel mill and you have a good job, you're union, you have good benefits, like you're pretty much set. And so those jobs do exist today. They're just less common than they were. And so so what does Tariffs do? Tariff basically tries to level the playing field. And during this whole time frame, I will say also that like corporations have gotten significantly wealthier, as in like the earnings that they make, Wall Street earnings. Company earnings, like the amount of money that they're making each year, growing rapidly, outpacing wage growth. And so, in other words, the corporations have basically decided to give the middle finger to the middle class, the people who work in the factories producing stuff. They went for the cheap exports from other countries using probably slave labor. And so they sell their items and they make a lot more money on these items. And so they lay off the middle class working people and they just keep more of the profits to themselves. I mean, they pay the upper management more and they pay the president, CEO, corporation, and the stockholders a lot more. And that's kind of why you see the top 10% and specifically the 1%'s net worth continuing to significantly outpace the basically the lifestyle of the bottom 50%, or at this point probably the 90%. So that's kind of the world we live in. And so if tariffs are implemented properly, it's kind of fighting back against these corporations that make crazy margins. And so if we can end up bringing production back to this country, I think that it'll be a big win for the middle class. But you also have to factor in artificial intelligence and technology and robotics coming. So it could also be a move to kind of re-onshore production, but it might be we might actually see a bigger shift going to robotics. So it could also not be it could be a play to make the rich richer is what I'm trying to say too. So I'm not entirely sure which it is. I hope it's for the sake of the middle class, but you can't be certain, but I will say that at least something's happening because, the rate that this country has been going is unacceptable. And, the truth is, I would say the undisputable truth is that, young people are at a breaking point, and if something doesn't change, they're either going to just flat out give up, which, I mean, you're already seeing, right? The deaths of despair are now at the highest rate since the Great Depression. And so if that's not a clear indicator that something's deeply wrong, I'm not sure how much more evidence you need, but so that's kind of what I see with tariffs. As far as the moves I'm making from an investor standpoint, next week could be a great opportunity to buy some stocks. And once again, this is not investment advice. This is just for I guess you call it entertainment purposes only, but I'm going to be looking at some stocks. I really like Robinhood, and you'll notice some of these stocks, like, look at the stocks that you're interested in and think, how does tariffs affect this stock? And Robinhood took a bath despite, like, I don't understand. I don't think its business would be affected by tariffs because it's literally just essentially turning into a bank, but it's a way to buy stocks, buy crypto. And so those are all things that are safe from tariffs. So I would, if you're interested in a good long-term stock, I do think Robinhood has a lot of potential. If you look at the number of millennials and young people using it, it's like significantly higher than any other platform, like running laps around them. And their last earning was fantastic. So pretty big discount on that stock. So I owned it for 2 weeks and sold it for a 24% profit, and I was happy with that. But at the current price, I would get in again if you have some spare money. And then obviously you probably know that I am continuing to get some GameStop. We'll talk about that later. But yeah, so if you're looking to pick stocks, I would look for things that aren't going to be very heavily impacted on tariffs, and use your brain. Just think about it. Does the company sell stuff? And if they sell stuff, where do they buy it from? And you can probably do the research and figure it out. So a lot of times people out of fear just sell everything, and so those are great opportunities to sweep in and buy stuff at a discount because the whole market is scared and spoofed, and you can get some really good deal on things. So that's one way I would play it. And so it's maybe some some of those growing tech stocks that aren't going to be very affected by tariffs could be a good place to look. But anyway, Naftali, good morning, welcome. And I'm just curious of your thoughts on everything I said so far, and your thoughts on tariffs, I guess, in general. And if you were playing, or if you were looking to invest some money after this meltdown of the market, what would you be looking at? Would you be looking to buy stocks, or would you stay away, or what are your thoughts on current trends?
As of right now, I think it's just really, observing, assessing. I think if we take a step back and have the conversation we're having right now, doing the research, doing the development, how do you invest in stocks when this kind of thing happens? So it's usually going back to Proverbs and assessing, using wisdom, trying to count all the costs, look at the opportunities. So when there's a crash, there's always an opportunity, but you have to find what's the right opportunity. When everybody was losing their houses, there was those guys with money buying up all the houses. When the stock market is crashing, there's those guys buying the stock that hasn't even gone up yet, but it's going to go up because it's a necessity to fix the problem at hand. So it's really understanding and then sometimes a stock or crypto or something might crash and everybody's like running around with their heads chopped off. But that's also a great opportunity maybe to invest. Now, don't go and invest in a stock that was $100, now it's 3 cents, and that company's going to crash. I'm not saying that. But there are companies that might be $300 stocks, that might be 3 cents. Invest every penny you can, and you'll be successful. So it's usually using wisdom and understanding the system, understanding the history. There's people like Ryan who studies finance and fintech. Or myself, I've been reading entrepreneurial books. I used to cut high school classes to go read Robert Kiyosaki books before I could buy them when I was 16 years old. Rich Dad, Poor Dad. I actually haven't read that book, but I read probably 90% of his other books. And this is my point, but those kind of people who maybe understand the history of tariffs, who understand the history of taxes. This is a broader subject. It's kind of weird because Ryan was explaining the tariff history. But I think we also have to understand taxes. Now, this doesn't operate in every country. This is for the U.S. only. The reason why we have taxes is because they lowered the tariffs. After World War II, they actually lowered the tariffs. But they started doing income tax in the early 1900s to fund World War I and fund World War II. Actually, the first The high tariffs actually started during the Civil War, which was a good thing, which was a bad thing at that point for those people, but technology wasn't what it was today. So I'm going to go over a little bit of the subject just to give them a history lesson, Ryan, if that's okay. Kind of. I'm not going to go into full detail. I'm just going to kind of give the concept of history. So let me explain this. So Ryan he asked a question to you, listener, why is tariffs going to hurt you? And I think this is why. When a millennial or centennial who grew up in a world, right, and even boomers who grew up in a world where they did not know high tariffs, it's going to hurt them. Tariffs is a good thing overall, but we don't like it, and I don't like it right now because it's hurting me, but it's a great thing. Tariffs is actually a great thing, and that's the American fault. What happened was they gave everybody higher taxes, income taxes, real estate taxes. Let me give you an example. A house that was $30,000 4 years ago, the taxes on that house was $200 a month, $300 a month. The taxes today on that house is almost $1,000 a month on a $300,000 home. That was. I've experienced that myself, where I've seen that big jump in taxes, just in real estate and residential taxes, commercial taxes, income taxes. The reason why all of that is so high is because we lowered tariffs and for the major companies. Now, don't get me wrong, there's a lot of small businesses. Now, that's another thing. A lot of the smaller businesses didn't operate on taxes because they did everything themselves. They produced their own fabric. They actually produced their own cotton. There was cotton factories in almost every single town. Shamokin had 2-3 cotton factories. A little town, small little town. Mount Carmel had cotton factories. These little towns actually they made their own fabric, made their own cotton, had their own butchers. They would have, I'm not talking about cities like Pittsburgh or even Johnstown. Johnstown is kind of big. I'm talking about small places like Somerset and all these different little towns that we can find in America. I'm talking about 5, 10, 20,000 people towns. I live in a town of 700 people. This town had infrastructure. They didn't really rely on imported vegetables, imported fruits, like the way it is now. 90% of our seafood is imported into the United States. Now, I'm going on a lot of subjects. I'm not trying to be all over the place, Ryan, but I'm going to get to the point. I know seeing, let me reframe this to the audience and Ryan. And Ryan knows this. The reason why we have this one problem that's affecting the stock market, but that's also tariffs, is because of tariffs and taxes 100 years ago, and because they didn't care, and there was all this corruption in the corporate. Don't get me wrong. On the surface, there was. Let me say this: 100 years ago, anybody could afford a car. 80 years ago, or in the 50s, it was so much. Most moms were stay-at-home moms. You only needed one parent to live. Cost of living was so much lower on the surface, which was great. And that should have stayed today. If that was today, America would have been so much better without them. I mean, of course, there was issues there like prejudice, but we're not going to get into that, segregation and prejudice. But let's look at just the economic. If they kept that system of the way life was in the 30s, 40s, 50s, 60s, with food, cars, everything was super affordable. Bread was 5 cents. What would have happened was, if they locked into that system of keeping high tariffs, today we would only know high tariffs. That means Ryan would probably own a company that produces something not made in China in America. A microphone, maybe let's just say he makes microphones made it in America versus if he makes Ryan can own a microphone company that creates microphones, but he has to go to China to get most of the components. And even if it's made in America, some of the parts are coming from China, because actually a lot of companies in America closed down. A lot of the companies in Europe have closed down. And if you want to buy a microphone from Europe or America, you're paying $4,000 or $5,000. Go look it up on Sweetwater. This is a real fact. But if I want to buy a microphone, I can go to China and buy the same kind of microphone, not as good quality, but almost, for about $100. And so that's what happened. We have to understand now this is affecting. Now Ryan knows the history, I know the history, but this is a large subject. This is like 3-4 hour subject to break down why is the stock market having the effect. It's because and now I'm not American, my grandfather's from South Africa, but let's just say if I was, my grandfather, part of the government, and he signed bills to lower tariffs and lift up taxes so we could fund the government, but then it also hurt everybody else because goods were made in other countries at a lower price. So Japan started producing vehicles that was just as good as the American vehicle, but at a fraction of the cost. Now, don't get me wrong, a Honda Odyssey might even be more expensive than a Chrysler. It might be more expensive than a Ford. Don't get me wrong, that came to bite us back in the butt. So that's why China can produce better vehicles at a fraction of the cost. They can produce a Maybach-style truck for $70,000 where we have to pay $250,000 for a Mercedes-Benz Maybach. That's my point. My point is because one action causes another reaction. And you might say, why does this concern me now? You have to know the history because we have to fix it. There's a problem. The stock market is crashing. We find out how do we solve it and how do we find the stocks that work. We find out the tax system is broken. The rich don't pay tax. We find out who pays the price is the middle class. The middle class gets hit the hardest. And this podcast is predominantly for the middle class or the lower class because you're trying to get money. You're trying to get rich. So there's a problem Ryan and I try to solve, and that is how do we invest in the future? How do we invest it now? Because you invest in crypto right now. You're investing in 5 years from now. Understand that right now it has everything. Tariffs right now has everything to do because food might go up. So eggs went from $11 less than a year ago to $30 for 60 eggs. That's crazy. And that's made in America. That's not even tariffs, but tariffs affect even the food grown in America. So I'm going to stop right there and Ryan continue, but this is a hard subject to talk about because Ryan, this affects everything. Tariffs hurts everybody, but it's such a good thing, but it affects the local people. And Jesus quoted, this is a quote from Jesus Christ himself. He said, when the Pharisees, I'm going to end with this one last thing, because this is the key to how we should run the government. And this is what Jesus agreed with the system. Jesus said, does the king tax his own people? And then Peter said, no. He said, so we don't affect, I'm paraphrasing, so we don't offend, not affect, so we don't offend the Pharisees. Why don't you go to the lake, throw your net in, catch a fish, open the fish's mouth. There's gold in the fish's mouth, so we don't offend the Pharisees because they want the temple tax. Kings are not supposed to technically tax their own people. Jews and Arabs still do this. If you go look at Dubai, they've eliminated income tax. Now, there is a small residential tax. I'm not saying that we should annihilate all taxes, but it's a mess. It's a mess. And I'm going to be honest, I love all the politics, and I don't love the politics. I don't like actual politics, but I support maybe more conservative. I'm more conservative, but on either side, it's like we're screwed, and nobody's coming to save me. The only person that's coming to save me is Jesus Christ, and Brian's the answer. I'm the answer. You're the answer. The listener, you are the answer. I apologize. It's not an arrogant thing. You are the answer. You have the answer. You have more power than the United States president. I just wanted to tell you that. Brian has that. I have that. This is a people thing. This is not a country thing because we're in a big mess. Sorry, Ryan, for that big tangent, but it's like it's opening a can of worms, you know. So what do you have to say about, tariffs, hurting people or tariffs being a good thing?
Man, thanks for sharing all that. That was, I think you really you drove the point home. I think you made a great argument and a great reasoning. And, I think a lot of people don't understand the history side of it and, even bringing real life examples. And we can see all the old factories in our little towns that have been, they're just a thing of the past. They're crumbling and they're falling. And so, I think that was really, I really enjoyed that actually. So thanks for sharing all that because I never thought of it that particular way. And especially that scripture reference at the end, I never caught that. And so to me, that's actually fascinating. That's one of those things that It's crazy how much wisdom is truly in Scripture, and like it's almost like Jesus was prophesying, possibly to today. Talking about not taxing, your own people and how that, how far this country has kind of wobbled since we started doing income tax and personal level. It's fascinating, and then when you really dig into the subject, like you said, the rich don't pay taxes, and so you got billionaires who don't pay any taxes, and they have a significant amount of wealth, and it continues to grow. And for some, I think their effective tax rate, I can't remember. It was like, I don't know. You guys should look up the effective billionaire or millionaire tax rate or whatever it was. I want to say it was like 5 or 6% that they came out with last year or something. So, something to really, really dive into. But when it comes to, I mean, it is heartbreaking though, because we've been so brainwashed as a society, as my generation. It was always go to college, get a degree, work really hard, make a lot of money. But I look at that advice, and I look at the people pursuing that, and I feel sad, because they're on a hamster wheel, and it's kind of a hopeless end. And so the reality is the more income that you make, the higher the tax rate you're paying on it. And so a significant amount, if you own your own business and you're like a private contractor, your effective tax rate is crazy high, because you're paying your self-employment tax, which is, your Medicare and Social Security. That right there is already 15.3%, I believe. And then you have your income tax bracket, which is probably going to be, let's just say 12%. Well, if let's say you're making like 80 grand a year, 100 grand a year, your income bracket's going to rise to the 22%. And then obviously you have deductions, but I'm not going to go into depth. And so a lot of the money that you're making, I would say past like 40K, 50K would probably be taxed at 22%. So you add 22% to the 15.3, you're already at 37%, and then you have 3% for your state tax. So right there, you're paying 40%, 1% for local tax. You're actually pretty darn close to paying half of your income in taxes. And so that's kind of why, like, I've come to the conclusion that, like, it's just not worth it. Like, it's not even worth it to make a lot of money in this country, because your tax rate gets so high. And so why would you work if you're paying 40% back? If for every, let's put it this way, for every 10 hours you work, the government's taking over 4 of those away from you. But you look at how the rich play their game, you look at their perspective, like, I mean, my strategy that I like to tell people, if you're looking to actually plan for the future, like, I don't do any of the 401k, I don't do any retirement stuff. And once again, this show isn't financial advice, but this is just this is what I personally decided. I don't think it's worth putting money in retirement. I think you're better off to manage your funds independently, have liquid, basically have it liquid, so or not liquid, but easily liquidable, so that you can invest in opportunities when they come up. But man, you start digging into like different strategies. For example, long-term capital gains rate is typically 15%, but if you are a married couple, the effective long-term capital gains rate essentially is, I believe it's $80,000. Anything under $80,000 long-term capital gains taxed at a 0% tax rate, which is mind-boggling to me. And then you add the standard deduction, which is 30 grand. So, long story short, if Naftali bought some Bitcoin early on, held it for over a year, and this year he said, "Man, I'm going to cash some of it out. I'm just going to live on this Bitcoin." He could sell 100 grand in Bitcoin, pay 0% taxes. His only tax burden would be his state tax, and I don't know if local tax, but his effective tax rate would be basically 3%, possibly 4% to state and local tax. But if he made 100 grand, like I said, if he owned his own business, his effective tax rate would probably be, 25 to 30%. So you're talking a significant difference. But people don't understand that, like, this system, it really it encourages people to be investors, and discourages people to actually work. And so, like you said, Naftali, the middle class do pay a large portion of the taxes because they don't know any better and they think that's how it is. And the second strategy, if you're rich, which I'm not I'm not calling myself rich, but I'm actually planning to basically use this strategy probably for this year. But you can just borrow against an asset you own, and what I mean by that is if you own Bitcoin or if you own real estate or whatever, you can just basically take out a loan. Like I can take out a loan against Bitcoin for less than 5%. And so let's say that you decide that you need 40 grand to live on for the year. You could take out a loan for 40 grand. It'll cost you 5%, which, 5% of 40 grand is, bennies. And you could just live on the debt. And then if your asset continues to appreciate during that time, you're almost living for free. And like people can't wrap their head around this, but like I'm telling you, once you start thinking this way, like everything changes. Like the way that you make money, the way that you try to make money, the way that you work, it all changes because it's basically I don't want to say you're figuring out how the system works, and you're basically exploiting the weakness of it, which is how the rich play their game and they don't pay taxes. And so that's available to you. You just have to get yourself to a position where you can take advantage of it. And most people just aren't willing to take the risk, or they just don't want to believe it, or they're just too deeply committed and they're happy paying 20 to 30% of their money in taxes. So, for me, what does that mean? It means that you can have financial freedom at a much younger age. If you accumulate enough assets that you could borrow against, or, like I said, if you hold them for over a year, you could sell them and pay 0% taxes on them. It's pretty crazy. So that was a good chat. I appreciated that, Noff. So that's kind of what's going on with tariffs. I think we both agree that they should be a good thing long term if they're properly used. And I'm not certain if they're going to hang around or if they're just a negotiating tactic. But I do think that, like I said, we're in a deeply bad position here. So be prepared. And if anybody has any stock picks that they're looking at, I'd love to hear that. However, there's different things we could talk about here. A couple different topics. I'm going to bounce on GameStop quick, and then I think we'll go into real estate because I think there's a lot to discuss there. But so GameStop, what I actually, this week, it dropped down to below $21. And so whenever you analyze a stock, typically, there's different factors you can look at. A lot of people look at the price to earnings ratio, which is basically what's the market cap and how much does it basically bring in revenue wise. And so you kind of use that as a multiplier. But what's interesting about GameStop and what makes them significantly unique in this time is that their market cap, at least at the time I was looking at this, was around $10 million, and their cash pile or cash equivalent pile was around $6 billion. And so they don't really have much debt, and I'm telling you, it is absolutely unheard of for a company to basically be sitting on this much cash and its market value to be so low. I think I was looking at a comparison, like even Berkshire Hathaway, which is known for sitting on a lot of cash right now. I think they're still less than 20%, this ratio of cash to market value. I think they're closer to like 12. And so GameStop's sitting at 60%. And why this is important is that we're in a market crash. And so like Naftali was saying, during crashes, if you have cash, there's some superior opportunities that come out of it. And so here's this company sitting, in my opinion, very undervalued. They have a ton of cash, and they've signified that they're going to buy Bitcoin, and they could be buying other stuff too. But there's been a lot of, I would call it insider dark trading, where there's been lots and lots of people buying over $1 million shares at a pop. that are basically offline. I'm not entirely sure how that works, but people have been reporting it. They said like 70% of the volume was offline kind of for the week. So I see stuff like that, and it makes me notice that there's a significant upside coming. And I even reached out to a friend of mine who's I would call him a professional trader, very intelligent man, and told him about GameStop and kind of explained what I thought was happening. And the response was I don't trade memes. And so I think that and I'm not trying to call him out or anything, but I think it kind of just solidifies my argument that most people have written this company off as a meme, and they're not even interested in looking at it. And in my opinion, those are the lifetime opportunities. That's like a lifetime wealth opportunity there, because whatever you want to look at stuff that other people are writing off. And so, for example, one time I was in a room not too long ago, and somebody made a comment about electric cars and that they just keep catching on fire, and that's all they see on the news. But if you study electric cars, you'll know that the rate that they catch on fire is actually significantly lower than gas cars. And so whenever this person said that, the stock was actually like, it was almost at a bottom. And so, like, looking back, if I would have bet against that, because I knew it was false, but I also knew that's the public perception, I could have made a lot of money, like almost doubled my money, I think, at that time. So those are the stuff that you want to listen to. Like, listen to what people are saying. Don't get in arguments with people. Just listen, because a lot of times the public will actually tell you what you should invest in. It's just the opposite of what they listen to what they think is stupid and not going to work. And do the opposite. Do your research, make sure it's valid, but do the opposite. And so that's kind of, I think that's been the thesis behind Bitcoin. It's been paying off significantly great for me. But but yeah, one last thing on GameStop. I looked into some options, and I never traded options before, so I just want to share this quick because I don't think most people have. And basically, I went what I would call long. I went long on GameStop, and so, and I'm learning still, but the price was, like I said, like around $21, $22. And so I bought a contract. And so, as I found out, this contract is basically an agreement to buy 100 shares if the price goes above this point. And so, for example, I think the contract was maybe cost me $77 or something. It's basically 77 cents a share. And so you basically pick a time. So I went like 3 months out, and I picked the price, which was $30. And so I bought this contract for $70-ish for 3 months out. Basically, what I think is crazy about this, because to me it's kind of mind-boggling. And so you could either the price doesn't go up. Basically, if it goes down, you could lose most, if not all, of your money. And so that's important to understand. However, if the price does go up above your contract price and significantly, like, the upside is actually unlimited. And so this is actually one of those leverage tools I talked about, that you could seriously make some crazy money playing this way. As long as you understand that it is possible that you could lose everything on this bet. However, when I look at it, if I'm super confident that GameStop's going to go, let's say, to $50 in the next 3 months at some point, and I buy a contract for $77, like, the amount of money I could make, let's put it this way. Let's say I bought, 3 shares of GameStop at $20, or 4 shares, let's say, for close to the same price. So, if I bought that, I'd still make, 150% profit, which is good. However, by playing this long game, if the price goes to $50, I think my profits would be, you take $50 times 100, you're looking closer to $5,000 minus some price and stuff. So probably in the ballpark between $4,000 and $5,000, as opposed to a couple $100. So that's how things can get really interesting. And so, I think that at least when I bought the shares, I thought they were dirt cheap. And so another leg to this is that you can actually sell these contracts early if you want to. And so in the time frame that I've held these contracts, they've actually, last I looked, they were up 88%, meaning that I could just I could cash out and sell them to somebody else, and I can make an 88% profit on my money. And the price only went up by, I think it's maybe $23, $24 now. So it went up by probably 15, 20%. But I essentially doubled my money on that. And so what I'm trying to say, though, is this is stuff that I would recommend starting to look into if you feel like it could be a good deal. A lot of people lose their money on these because they're gambling, but I think that if you have a strong thesis, this is a good way to add to strategy. And so I still own a lot of shares, but I'd say this is 10 to 15% of my GameStop portfolio is these option calls. And so, if you don't have a lot of money, this could be a great way to really see some multiplication, especially once the price gets beat up pretty hard. So, like I said, I've been doing a lot of research, and I think that that's why I'm making this kind of bet. And it's not even that much money. I mean, like I said, $70. I mean, you lose it, boo-hoo. For me, that's not like a significant amount of money. But I did want to say one thing. I never really understood how Roaring Kitty during that whole GameStop hype made so much money because, his net worth's in the hundreds of millions of dollars. Like I said, incredible story, but I looked at his Reddit and I found out that the way that he made most of his money, he bought 500 contracts for basically $20 each. And so I did the math. It was a $10,000 investment when the price was like $1 or $2. And so since the price like seriously ripped, his $10,000 I think ended up turning into, at the time of the screenshot, it was worth around 90 million. So, I'm not trying to say like this isn't a gamble. Like people think this is a gamble, but the guy did some serious, relentless homework and made a very educated bet based on what he discovered. And now he's rich. He's rich for life. He's wealthy. He basically made it. And a lot of people write this off as a gamble, but there's a lot more to the story, and I think that we can tap into wisdom similar to that. And it's so crazy how many opportunities there are if you do your own homework and research and really dive into things. Like I believe that there's so many opportunities to 10, 50, 100, 1000x even your money. And so that's kind of how I think this wealth transfer happens. And so all that to say, I'm going to keep looking into some options on GameStop and probably even Robinhood on Monday. If the market's still red, I'll probably buy a contract for Robinhood maybe 3 months out. Whatever looks like a good price, because I think that stock's going to be a winner long term. So it's a good way to kind of diversify a bit, and we're, maybe the price keeps going up and maybe I cash out at a 300 or 400% profit. We'll see. I think I'm just going to hold them long term in case it really rips. But so that's just something to think about. Like I said, it's possible. Let's say the price goes to $50 in the next couple weeks, which has happened before. And, my $70 bet is going to be worth potentially like $5,000. So pretty crazy. Anyway, that's kind of my GameStop talk. So I want to kind of pivot really quick here into real estate. And so I think these tariffs could be interesting because I'm trying to figure out what happens with real estate prices because I was listening to a guy on the show, and he owns basically a company that sells flooring. And he said after the tariff announcement, he said that his price, his import price, basically like it's going up 80%. Like that's going to be the rate of his tariff for the flooring that they sell. So it sounds like a lot of materials are probably imported, which once again is a problem. But I'm trying, and I would say if you look at the bond prices, it does appear that interest rates are probably going to come down. I think that's another possible strategy with these tariffs. So I think that we're going to see higher material costs for building houses or remodeling houses, and we're going to see lower interest rates. So Naftali, I'm curious, because the market obviously has been very hot. Do you think that real estate goes on another bull run, given the fact that the price to build's going to go up and the interest rates are going to go down? likely. Just curious. What are your thoughts? Because we're considering selling our house, so I want to hear what you say. All right, Knopf. I can't hear you. Let me. I'm gonna send you down, then bring you back up. So hang tight. Apologies for this little issue we're having here. All right. Awesome. Floor is yours, my friend.
All right. Usually, I'm very on predictions of real estate, and I think I mentioned this to you before. I'm not seeing the picture as clear. Usually, I'm like 90% and 100%. It's been a gift of mine, but when I don't 100% see the picture, I stop, I reflect, and I counsel and getting with different entrepreneurs, speaking with Dave, speaking with you, trying to feel it out. I can throw my projections and my predictions out there. So you said a key word when you were talking. Now this is not. This is about real estate, but when you were talking about GameStop, and you said do your homework. So please, this is not financial advice. Please do your own research and do your homework. So let us talk about it. We read California, people actually leaving California. New York's getting, not New York, Texas is getting overpopulated in real estate in Texas. And Texans are leaving Texas because they can't afford to live in Texas because Californians are moving to Texas and Florida. And people from Florida are leaving Florida. So let's read the articles. I pulled up an article, Googled, and this is I'm gonna look at where did I seen it earlier. So I'm gonna pull it up right now. I'm gonna read the article for pretty much it was saying that real estate in especially Western Pennsylvania is about to go up. So here's it. A $740 million project in Pittsburgh, Chattanooga neighborhood aims to transform a 15-acre site along the Ohio River into a mixed hub featuring housing, retail, entertainment, and a nearly 200-foot Ferris wheel. Pittsburgh International Airport is also expanding at a $1.5 billion project to enhance the airport facility. Then the UPMC Presbyterian Hospital expansion of $1.5 billion. So that's almost $4.5 billion. Just talking about 3 different projects. I'm not talking about like a citywide project. I'm talking about just 3 projects in one city. And then it says the downtown realization of the 10-year strategy. They put in $62 billion into state funding. So that's the others is all private. This is state, except for the airport's probably private too. But this is public. This is state funded. They put in another $62 million into the city at about $62 million. And then there's a whole bunch of stuff going on in Western Pennsylvania. So I look at the research. Do your homework. What is the number saying? Like, there are some guys that saying real estate's going to crash. And this is good. And I'm not saying those guys are, how can I refer to this? I'm not saying they're not comfortable or capable of relaying the truth, but when the numbers don't lie. So research, the economy's in a mess. Do your homework, find out the location, partner with somebody, find some investments. If you don't have the money, a lot of billionaires, they might be the richest people on earth, but they actually don't use their own money. The richest people on earth they never use their own money, because if they use their own money, they have to pay capital gains taxes. But they start getting hit with stuff. So they only get richer by borrowing somebody else's money, paying that money off, and then they don't have to pay taxes every year on the interest. They just pay interest until the property is done, and then they keep it with inheritance and pass it on to their children. So Ryan, this is something that I think I would like to hear. What's your opinion of local? I mean, you talked about real estate market, but and the idea of the functionality of it. But what about locally? And what's your predictions on local? Because this is where I live in America, but now until I move either to Delaware or South Africa, what's your predictions of the local market? And what's the numbers saying? Because a lot of other places, people are saying the opposite. In Philly, real estate went a little bit down. In New York, it went a little bit down. I think it's going to go even higher, but it's going down. It looks like it's not going down here. That's what I'm saying.
Yeah, thanks for those thoughts. Very, very good points. My theory is for the local area, I think you have to look at what your average price house is, and I think you just have to kind of use some common sense and think, okay, can the average couple, we're not going with single incomes now because that's a thing of the past, can the average couple afford the average price house? And so for our area, you're looking at around 200 grand. Current rates, they can't. However, if rates drop below 5%, which, I think at this point, the economy is basically crashing. If the rates do not come down, I think we're going to stay at least stagnant. However, if the rates come down, I think that prices are going to hold steady, potentially get more expensive because, it's all about what people can afford on their monthly payment. And so, dropping a couple percentage point or percentage, I don't know, numbers, because points is sorry, I probably just confused you a lot. So let's say we go from 7-ish to 5 or 4-ish%. All of a sudden, a lot of people can afford to buy a house. And I think there's actually a decent number of people right now that could afford a $200,000 house. It's probably the top of their budget. But if rates go down, they're actually going to start putting in offers on those places because they want a house, and I think that they've probably been waiting long enough, and so they're just going to pay what they have to. The thing with a crash and what would cause prices to crash is if people basically lose their job, they stop making their payments, and they get kicked out. And I don't see that happening because I feel like a lot of people who I would say own a home around here are older, which means they're probably on more fixed income. And I think that their house is probably close to paid off, or their Social Security retirement can cover the monthly payments. Young people don't own many houses around here, and so I think they're the ones that are probably at a higher risk to lose their job. And I think most of them are renters, so if anything, I think you're going to start seeing a lot of people not pay rent, which is sad and hard to say, which makes it unattractive for landlords. Like I just talked to a lady who became a landlord for the first time, and it's like her tenant is already behind on rent after the first month, so that's pretty concerning. And a combination of what you said, people are migrating here, and the houses is still about half or less than half of the national average. So all that to say, it's affordable to a lot of people, and so if the price of materials goes up, which it's going to regardless, because even like lumber, we import lumber from Canada, so and the price to build a house around here is currently around double what it costs to buy an existing house. So, in my opinion, building a new house around here is kind of foolish because you're not going to be able to sell it for what you pay to build it, which is just a bad investment in my opinion. But, I think what we're going to see is we're going to see an increase in foreclosures. But I think that those foreclosures aren't traditionally. You're typically not able to get a loan to buy those. So I think we're going to see more of those coming. And so investors are going to snatch those up, and there's going to be opportunities to probably flip. But I think, I think long term, I don't see how prices go down very much because nobody's selling their house. And so if rates go down low enough, like I said, sub 5%, people might start selling their house to upgrade, but I still don't necessarily I think we're going to see a lot of that because the supply is just so low right now. It's kind of crazy, and so you're either paying like I said, 200 grand or so for a nice house, or you're buying a house. Like literally, I just saw a house was listed for 40 grand, and like it's a dump. You're basically just paying for the land. But like that's starting to become your options. Like it's either like because the next factor in this too is how many houses are going into distress because people can't afford to upkeep it. It's kind of concerning. A lot of houses are kind of just falling down. People still own them, they're living out of them, but they can't afford to put a new roof on, they can't afford to put new windows in, so they kind of just throw up some boards and throw some tarps. And once again, another downstream factor of selling out our manufacturing. But you know, I think it's kind of just basic economics. Like if the price to build and renovate goes up significantly, which I think it does, um, I think it's actually going to hurt people who flip houses. So now, like either they're going to have to raise their prices or they're not going to take the risk, which means supply stays low. And if you actually like the real estate lady I talked to, like a good bit of the houses on the market in Somerset right now are actually flips, which I think is very interesting because like that's not super common, which tells me that people do not want to sell their homes. And if people don't want to sell their homes, the supply is going to continue to remain low. And there's only so many houses, in this area. So, of course, like why would you build a housing community when the average home price is 200 grand? The fact is you would lose money because you'd have to sell those houses for closer to 300 just to probably make even or break a profit. But why would you pay 300 grand for a house that's a new build and probably not, basically not as nice as a house that you could buy right now for 300 grand that has, private acreage, private land, and is a more of a custom house, I should say, much higher quality. So, yeah, it's pretty fascinating. So I'm still praying about it. Not entirely sure. I do think that my thesis before was that I think we were getting closer to a top for the moment, but now that these tariffs came as hard as they did, I drew back on that. So, nonetheless, we'll see if we decide to sell our house. It's up in the air, but I mean, yeah. Long story short, it's really just bad for people trying to buy their first house who live around here because I don't see that significantly getting better. Lower rates will help, but if rates are lower, people are just going to raise prices because you can afford to purchase more. So that's kind of my thesis on it all. But yeah, great discussion there. It's kind of an exciting time. You have any final comments or any questions or anything, Naftali, before we close out here for the day?
So two comments. One comment is I met somebody this week who's in ministry, and they go all over the country to preach, and they're from Philadelphia originally, and they've lived in the Johnstown area a couple of years. And he said, "Hey, brother, I'm looking for a new church. Me and my wife, we do ministry." And then he said, "My mother just moved here." I actually met his mother, but his mother just moved here from Philadelphia, like in the last week. And so there is something going on, bro. We just need to get together, not just me and you. I mean, together as a body of Christ, as a community, and talk about this and really do something about this. The second thing is I'm going to do a 2-minute rundown on a mortgage. So let's just say I'm looking at it right now. There's a house for $210,000 in Richmond. Now this is realistic. It's easier to get a 15-year mortgage than a 30-year mortgage. 15-year mortgage, insurance and property taxes included. You're looking at about $1,600 a month on a 15-year mortgage with $12,000 down on that property. At about $12,000 to $15,000 down. You're looking at probably about $1,500-$1,600 a month on that property. An average 2-3 bedroom apartment between, I would say, Bedford and Pittsburgh and maybe Erie, you're looking at that price. An average 2 to 3 bedroom probably $1,400 to $1,600. And so you can own a home less. You can own a home with insurance and taxes paid for at the same price you can pay rent for. That's a smaller property. This is a 4-bedroom house with garage, and this house is probably worth about 350, 400. So even if you bought the house and stayed in it for a year and then flipped it, and then actually that wouldn't be my advice. My advice would be try to buy another property, maybe rent that property out, sell this property, make 150K with the property, and then flip this. So there's a way to flip this property. It's move-in ready, doesn't need any work. That's a realistic example breakdown at $12,000. If you partnered with a friend of yours to come up with $12,000, I think right now we need to talk about collaboration. Find 2 or 3 friends that might want to partner. Maybe one person can live in it and then they can pay rent or substitute for a year and then flip it. Because I think you need to sit on it for a little bit to earn that big income. Like, don't get me wrong, I think you can sit on the house for a month and maybe make $40,000, but then you might get penalized for pulling out the mortgage too early. So those are things you need to watch. You also need to watch when you sign a mortgage contract that what they're doing now is they don't want people to become entrepreneurs. So they put in the contract, you can't rent the house out, you can't sell it in a certain amount of time, or if you do sell it, you have to pay. They say, well, you can sell it, but here's the fee. Or if you rent it out, here's the fee, because they don't want you to make money. And so you have to use wisdom with these contracts for these mortgage companies. But it is the biggest opportunity to make money. And so if you partner with the right person, you can make money instantly.
Yeah, I like it. Good point there about reading the contract too. Definitely don't want to sign something with like an early payoff fee or, like you said, those other fees. So good input. I think it's still kind of wild to me though, thinking of a $1,600 a month payment, but you're talking the average price house, and you're still talking a nice. How long would it take the average couple to come up with that much of a down payment? 13, 15, 16 grand. If you could save $1,000 a month, I mean, it still takes you a year, and then you hope that the prices don't go up another 10, 15%. So that's kind of the trap people fall into. They save up for a down payment, and then by the time they get the down payment, the price of the house rose by 20%. So now they gotta just keep on stashing money because the price keeps running away. So that's kind of why I like, to be honest, like if you find a good deal, just find a bank that lets you borrow 100% because, to some degree, it's a risk or a hedge against inflating price. And so, worst case scenario, yeah, the value drops, but hold on to it for a couple years, and it'll be right back at where it was. So, interesting thoughts. A lot of people would disagree with me on that, and that's okay. But I know a lot of people who have been saving money for a down payment, and they still don't have a house after 4 years because the price just ran up like crazy. And so, if they would have bought a price and borrowed 100%, they'd probably be sitting on 100 grand, which is hard to fathom. That's, 2 years of work for a lot of people, probably 3 years of work. So, shift your perspective, shift how you look at it. A house doesn't just have to be a place where you live. It could be a place, it can be something that works for you and makes money. So, so play it smart. Let us know if you guys find anything or have any questions about this. I am definitely looking to dive into real estate this year more, so I'll keep you guys posted as that happens. But for the time being, great conversation today, Knopf. I appreciate the time. Definitely need to get together soon and do some discussion, and we probably should host another investor meetup, try and get that going again, and just share some thoughts, because we're definitely in an interesting environment right now, even with the world. There's a lot going on that we could talk about, so it's good to kind of stay in touch with each other, learn as much as you can, learn, grow, and try and keep moving forward. So nonetheless, Knopf, appreciate you, brother, love you, and hope you have a good rest of the week.